Howdy, Jacob here. Today we are looking at Decker's Outdoor Corporation, company 30 of our fundamentals screener. They are in the textiles, apparel, and luxury goods industry with 22.7 billion market cap and 21 billion enterprise value. Growth is pretty substantial, doubling in the last 8 years. So that's pretty grand. The return on invested capital is increasing. Both operating and gross margins are increasing. That's great to see. The company's been around since 1973. So been around for a little bit. Shares going down, net income going up, revenue going up, balance sheet, 982 million cash on hand with no short-term debt and no long-term debt. They have more cash on hand than all of their liabilities. So very safe company. Okay, very good production of cash flow. Their use of cash is very heavily on share repurchases. It looks like they've definitely increased their cash balance as well. So their use of cash is really to just increase cash balance. Hopefully the reason is to create a possible opportunity for investments. But outside of that, they definitely take the dollar cost averaging approach to buying back shares, and because they've been buying back quite a bit of shares since 2015, really, and they're just that's the use of cash. So paying down shares, and then increasing cash balance. And again, hopefully their increased cash balance is for them to, have the ability to buy something that comes up without having to go into debt for it. Let's start making some assumptions here. I think we're ready. Revenue growth side, I think 6% to me seems pretty reasonable. Maybe let's do 7%, and then let's do 18 on the PE and price to free cash flow at the end of 7 years, 15% return. Let's say they buy back 4% of shares. What is that? 20 billion. You're looking at 200, about 800 million. Okay, that might be a bit too much. Let's do 3% of shares for them to repurchase. And then on the net income side for margin, I like that. Free cash flow is a little bit higher. That's great. Let's do 13, 14. And it's just a little bit expensive at this price point, which again makes sense because the current P is 31. But I think it's a fantastic company, one that I absolutely would like to own. I'm just a value investor, so I want the price to really make sense to me. At this price, I'm just not seeing it. So hopefully everyone has a great rest of their day. Enjoy the video, and I'll see you in the next one.